What up, HyperChange? Welcome to another episode of G to a Milli, where I open source building my investment portfolio with y'all, the internet. We can go through my stats real quick. Been 613 days into the challenge here. Portfolio is worth about 43,000. I've deposited about 27,000 into the account so far. Up about 50 or something percent. S&P is about 20% if you put the same amount of money to S&P. So I'm ahead of the S&P for now. I don't think I will be forever, but whatever. Those are the stats. And I've made some dumb moves recently, honestly, and this episode is more of like, what do I do next? I've made a bunch of dumb moves than telling you some awesome move I have. So I've still been holding on to Tesla and Bitcoin, my two main positions, held those since last episode, but now I've actually put a tiny amount of the portfolio into BitMiner. Now, a super small amount of the portfolio, I think it's like 1 or 2% or something, because, I add $250 every 2 weeks. I think that's an amazing way, automatic deposits to just build wealth into your broker account. But anyway, that helps me do it. But what did I do with my $750 2 weeks ago? I bought BitMiner, and then the other 250 that just came in, I bought a little Coinbase. So BitMiner, let's start with that. Then I'm gonna get into Tesla and Bitcoin too. But BitMiner, okay, so BitMiner, it's all Amit's fault, because I watched an Amit episode where he interviewed Tom Lee, who was talking about creating this new vehicle called BitMiner, which is a publicly traded company that is basically designed to acquire as much Ethereum as possible. 5% of the Ethereum network is their goal to acquire and sort of be this holding and treasury company for it. This is similar to what Michael Saylor's done with Microstrategy, acquiring Bitcoin. So I thought of this as a levered play on Ethereum. And now, before we get into why that was dumb, I'm already down like 26% in like 3 weeks on my BMNR trade. So I'm just like, ugh. And it totally was an uncharacteristic move. My homies were like, Gally, this is so weird that you would make this trade. Let me first explain why I'm so bullish on Ethereum and why that trickled down to BMNR. So Ethereum has always been, you got Bitcoin, digital gold, Ethereum, the number 2 largest blockchain in the world, about 500 billion right now, that is digital smart contracts, this world computer. Due to lack of regulatory clarity, I would say, in the United States, there's been slow for the financial system to officially adopt Ethereum. Now, that massively structurally changed with the passing of the Genius Act, which has been going on for years and years, but has finally got passed, and basically has made it legal and created this framework for these Ethereum and stablecoins on Ethereum to flourish. Why is that such a big deal? Because USDC, which is owned by Circle and Coinbase, and has been on fire recently, which is a token that is backed by the US dollar that gives you a 4 or something percent yield, is taking off. And one of my friends, shout out to Julian, he was buying USDC, telling me he's putting a bunch of money in his Coinbase account to buy USDC. He didn't even realize that was on the Ethereum blockchain, that it's a token on Ethereum. So to me, this was the 0 to 1 moment for Ethereum, where people are using it, not even realizing it's crypto, but saying this is an amazing financial product. So the Genius Act has now opened the floodgates for the entire financial system to be rebuilt on Ethereum, on the blockchain. So this has been years in the making, and now that we have the legal framework to make it happen, I kind of panicked, freaked out, and got very bullish on Ethereum, because now I think it might be able to live up to its potential. So all of this excitement, and obviously I should have just bought Ethereum probably, that would have been way better. But then I was looking into BMNR and I was like, oh, this is a hedged, or a levered, so to speak, play on Ethereum, where if Ethereum goes up a little, this will go up way more. That hasn't really happened. Of course, I asked Perplexity about BitMiner, when I'm researching it. And next thing you know, it's telling me, oh, they own, 5.6 billion worth of Bitcoin or worth of Ethereum. They're trading at 6.9. That's only like a 23% net asset value premium. And I was like, okay, that's actually really cheap. They're like the low premium relative to what some of these other crypto holding companies have traded for. And if they buy a ton more, then the NAV will shrink even more and the price will go up, and it'll go up with Ethereum. So I had all these theories, didn't look into it, had all the numbers wrong from Perplexity. This is a warning to y'all. Be very careful when you ask AI financial numbers. It's not good at this. I still think this is one of the areas where AI lags, like real-time financial data. They had already diluted a ton of stock. The NAV was more like 2x. It was like 5 billion of ETH with a 10 billion market cap. I didn't know that. So I just totally fumbled the bag. And now BNMR is down 26%. And the more I look into it, they're literally selling their own stock to buy Ethereum. So will that actually pan out better than Ethereum? This is a whole scheme. I tried to get fancy, and it probably will crush it the second I sell. I want to sell my BNMR, but I haven't yet because I'm waiting for a pop like an idiot. So it just keeps going down. But anyway, I only put, 1% of my portfolio in it. So it's okay if it goes to zero. And I think it's an important kind of symbol that I was thinking of like my portfolio of like slow like a turtle. It's one of my mantras to always move inch by inch when investing, do a toe in the water position, do more research, learn what you're buying, understand it. Oftentimes it's hard to do research and really think things through until you actually own a little piece of it. So, and then you figure out if you like owning it or hate owning it. And that's something I've done a lot on with my account on G2Milli. I dabbled a little in, I hate to say it, Rivian. Realized how dumb that was, quickly sold. And BMNR is going to be something similar. And so, but I still think this high level idea of Ethereum, I mean, the other big thing about Ethereum is since the Genius Act passed, you've seen Peter Thiel, he's funding BitMiner, he's funding all these other companies to buy huge pieces of Ethereum. Vitalik Buterin, who is the founder of Ethereum, was actually a Thiel fellow. So Peter Thiel has kind of been scheming on this from the get-go. And the second the Genius Act passed, he's moving big chips onto the table. At least that's what I thought. So I was kind of following that. And I think still my, like, as much as it seems like a quick trade, this whole BitMiner Ethereum thing, it's actually part of a much larger thesis that I've had for years of like the blockchain disrupting all of finance. And now with the Genius Act, that is going to play out. And we're sort of going in this phase 2 of crypto of not just Bitcoin being a financial asset and trusted, but all these things that now get built on Ethereum like USDC become real world products in the financial system, get mega adoption. And I think there will be tons more, not just USDC. You saw what Robinhood's doing to try and tokenize securities. That's going to be a massive new market that unlocks soon where people can buy in tokens that are backed by stocks. Like you probably in the future will be more likely to buy a token of a stock than the actual share. So we are in the midst of such an insane structural change in finance where everything has the potential to move on to the Ethereum blockchain or a lot of things that this has got me very excited and scheming on how to move my portfolio to take advantage of this. So now the stock I bought recently, or 2 days ago, Coinbase, I love Coinbase. And it's funny because I traded it and sold it at like 300 and then it went to 400. Now it's back down to around 300 and $80 billion company. I mean, it's just like 1.5% of the entire market cap of crypto. So I always look at that and I feel like Bitcoin's run up, but Coinbase has gone down a little. So you don't want to get too lost in the sauce with the timing, but I felt like it was good timing. And Brian, I keep coming back to what has been my most successful thing investing, which is owner, operator, founder. Brian Armstrong, who runs Coinbase, is the owner, he's the operator, he's the founder of the company, he's had the vision, he's always done the right thing in crypto. He built the Base network, which enabled this whole USDC coin. He's been 10 years ahead of everything, it seems like, in crypto. So I think my play for crypto, beyond I love owning Bitcoin, although there is a whole thing with the concentration of miners that I'll get to in a second, but is I love Coinbase as being a play on they are getting huge exposure to USDC in this Ethereum thing. So not only are they exposed to Bitcoin, but also this huge new Ethereum sort of explosion. I think Coinbase will be one of the main beneficiaries. So even today I was gonna sell my BitMiner for Coinbase, but then I just feel like BitMiner is gonna pop one of these days and then I'm gonna sell, which is so dumb and not what I should be doing, but whatever. So I'm in shambles, as you can tell. I have this scheme that Ethereum is like totally taking over and is this amazing play. And there's such this new game-changing innovation happening in the financial system, but I don't really know how to play it. I don't want to just buy Ethereum. That seems boring. It doesn't have the same like supply constraints that Bitcoin has. But maybe just buying Ethereum is the play to capitalize on that. But either way, I like more owning the company, which is Coinbase and Brian Armstrong. So even though that's my tiniest position now, I think I'm going to sell my BitMiner and move it into Coinbase, but that'll be another episode. But very bullish on this whole space. And if you guys have ideas about how this Ethereum innovation plays out, what's happening next in that ecosystem, how would you play that trend? Like, that's one of the reasons I'm making this episode. Like, I want to know what y'all think. Moving to Bitcoin. So Bitcoin, I feel like, is at a very interesting, because on one hand, Bitcoin's been going down a little, but from like 125 to like 112, but it's still massively up. So I'm trying to keep that in context, but there's two rumors going around there's three things that are happening with Bitcoin that I would say I'm thinking through. If Ethereum really takes off and becomes the backbone of the financial system, does it become a better digital reserve currency than Bitcoin, or at least compete with it? Maybe. Bitcoin has this rumor going around that two of the miners were concentrated to be like 40 or 50% of the hash rate. I don't know how true that is, But basically, like of the miners, if 51% of people control the mining of Bitcoin, they can double spend and like start messing with the blockchain. So it's very important that Bitcoin remains decentralized. But two of these miner pools together got close to 50%, and that spooked people. I don't know if that actually had an impact on price, but that's another thread I want to look into. Is miner concentration going to be a risk to Bitcoin and its long-term thesis? But also, I feel like the miners are heavily incentivized to keep Bitcoin going because that's their whole business, so they wouldn't sabotage it. The other thing is you have AI hacking the Bitcoin algorithm with quantum computers. Everyone, that's like the rumor of how Bitcoin will end and get hacked eventually, but I just feel like AI is advancing so quick that I'm sort of a conspiracy theorist in worrying about that kind of doomsday. And that's super important with all assets. What could go wrong? If you're not an investor, if you're not thinking about what could go wrong and rethinking your position every day. So I'm holding on to my Bitcoin. I'm as bullish as ever on it, but I'm thinking through those things. And part of me does think Coinbase would have more upside than Bitcoin, but I don't want to get too fancy here, so I'm just going to hold on to it. Then let's move on to Tesla. Of course, Tesla, not much has happened. Well, I haven't traded it in the portfolio. Tons happened with the company. I mean, why am I not buying Tesla with my extra cash and diddling around with this Ethereum stuff? Well, I think Tesla has a lot of expectations priced in. They're going to have a massive quarter. You know, the Kalshi prediction markets are showing it's going to be like 500,000 of, like 500,000 cars are supposed to be delivered this quarter. That's what the prediction markets are expecting. So we know there's a blockbuster quarter coming. I think the market's running up into that news. Robotaxi keeps expanding in Austin, so that's really good news. But after this tax credit ending, Q4 sales could be really bad unless there's some sort of cheaper car. The long-range Model Y in China is crushing it though. But my point being is Tesla's this $100 billion business that I don't see growing to 150, 200 billion in revenue to justify upside from where it trades, 1.2 trillion. Like, it's just hard for me to see where that revenue growth comes from for the next 12 months. So I think we have flat revenue for 12 months. The stock price has been going up. At some point, you need the financials to fill into that share price. So right now, I feel like the expectations for Tesla have gotten higher when their execution really hasn't changed, and we're still 12 to 18 months away from profits inflecting upwards because of robotaxi or semi or something else. So if you're at 95 billion, 100 billion revenue run rate, but trading for 1.2 trillion, but you're not growing, I think that gets hard to justify, especially with the low earnings that Tesla has, or low margins Tesla has relative to like software companies. So I think Tesla's in a very precarious situation now as they navigate into this phase of being an AI robotics company. And just in the near term, there could be some hiccups in the valuation and it could be volatile still. So, and the stock price has continued to like run up massively. Like if you look at Tesla charts, like, yeah, it had that spike to 450 or whatever, but around 350, like we're pretty close to the highest it's ever been. So expectations are also very high. So that's an important thing to remember. Quick pause. This episode is brought to you by The Rundown, which is an epic podcast that comes out daily whenever the stock market is open. It's under 10 minutes. It's going to run through all the best and most important financial news of the day. I think y'all would actually like it if you love HyperChange and scheming on stocks. It's a great fun way to catch up on the markets, hear a different take on the news. So I'll put a link below. You can find The Rundown anywhere you listen to podcasts. Huge shout out to The Rundown for sponsoring this episode. It's also one of the top ranked finance podcast with thousands of listeners tuning in every day with a perfect 5-star rating on Spotify. So check it out. Okay, anyway, back to Tesla. So I think Tesla is in kind of this weird position right now as they try and execute. I mean, just crunching some of the numbers for robotaxi, it's gonna take them, significant expansion to get into the 1 to 2 billion revenue run rate range, which is then when it starts to show up on the financials really. So we're still so far away on that. I just wonder what catalyst will get investors excited until that happens. Maybe it's progress with Optimus. Maybe it's the semi-truck taking off. But something about Tesla just feels like people are too excited and it's too good. But when the credit expires, it won't last. So I don't know. That's something I'm really trying to think about. This is funny because one of the questions I'm reading questions from the last G2 Millie. Also, if you have questions or like things I want to scheme on for the next episode, leave them in the comments below. But this guy at Guy94 said, thoughts on Microstrategy as a Bitcoin Treasury company? Would you consider adding them to your portfolio for leveraged effects? Which is super funny because I think I internalized that and then ended up buying BitMiner to get leverage on Ethereum, and then that totally screwed me over. Even though I've been saying the whole time about MicroStrategy, oh, it's just better to buy Bitcoin. And then, of course, I go buy BitMiner instead of Ethereum. So I don't even know what I'm doing here, but something about the way these Bitcoin treasury companies work is rubbing me the wrong way, so to speak. Like, using leverage to buy the asset, you're kind of putting leverage in the crypto system, which I don't think is a good idea. Like, on one hand, BitMiner is just selling stock to buy Ethereum, but MicroStrategy is actually taking on debt to do it. So I feel like that adds some layer of risk. And to be honest, and this is why I think I need to sell my BitMiner, is I just don't understand what really the model here. Like, what is the goal? Why does this company exist? Like, what, the whole point of crypto is you own the asset, you have this freedom with it, but if you're just buying an equity, you kind of give all that up and give control of the keys to some other person. So I don't know. And this is a good question to me because MicroStrategy has become such an interesting case study. I mean, they literally own like 2% of all Bitcoin. I think it's even more than that, like 600,000 something Bitcoin out of 21 million that will ever exist. And they keep buying more. So that's almost as much as Satoshi, who has 1 million Bitcoin. So at what point does the whole centralization thesis of Bitcoin start to matter less and less if it's like these huge whales owning it? I don't know. But on the flip side, like, it's a free market. Anyone can buy Bitcoin. Saylor's doing it the fastest, so maybe he deserves it. So I don't know how this will all end, but I do think it's very weird that we have these companies that exist to just buy and hold Bitcoin and Ethereum, and even weirder and dumber that I invested in one of them. So yeah. So this guy says, why no Rivian at Canonic Games? Extremely undervalued EV company, and they're going to thrive after Tesla. Only US EV company mentioned in the same breath as Tesla is Rivian. That's a very interesting point because I think Rivian as a brand to consumers is an amazing product and a really cool car, and I would say is, on par with Tesla in terms of a great brand to buy from. The one area where it falls short, why I would personally never buy Rivian, is because they don't have full self-driving. That, I think, is a killer feature that once you get it, you can't live without. So Rivian has no part for me in the future and the most exciting part and money-making part of the future of transportation, which is the self-driving car. They're going to have to license it from someone else, or they're trying to build it in-house, but they're way behind. So that's the problem with Rivian. Also, they lose money on every single car. Tesla's been profitable on all their cars. So Rivian, to me, that shows this massive inertia and friction within the organization. Plus, you have RJ Scaringe, who owns like 0.3% of the company or something, gets paid like $1 million in cash, versus Elon, who takes all his, he just owns stock, gets paid nothing in cash. So there's just a different set of incentives with the leadership. That being said, I do think the R2 has massive potential. I think the R2, if they can actually deliver it, and it sounds like they're getting ready to in the first half of next year, is going to be a huge hit if they can hit that $45,000 price point. I don't know if they can, plus you got the tax credit going away. So I don't know. I think Rivian's a great car, but a crappy business. And, I think the results speak for themselves. Like, their share price, Tesla's made investors a ton of money since it went public. Rivian has burned all of investors' money and kind of screwed them over. So part of me who's like always batting for the little retail investor, like, I don't like Rivian. Like, okay, the cars are dope and they're electric, but from their financial side, they, like, all the VCs and like early investors and RJ Scaringe and CEOs cashed out and got super rich. And then they IPO'd and sold it to all their future customers and fans and screwed them over, and the stock went down 90%. Like, I'm on the side of the little investor. So if you screw over your little investors to make your VCs a quick buck and don't own any of your company, like, you're just kind of a lame loser in my book, honestly. And so until he makes right by his shareholders, then I'm kind of like skeptical. I don't like that, And the self-driving thing is huge. I mean, and that gets me back to why Tesla is so interesting right now, because you look at Waymo and Tesla, these are some of the most valuable companies in the world based on the potential of their self-driving technology. I think so much of the focus and future excitement about the auto industry is based on that potential, that if you don't have a self-driving story, I think you're going to be discounted heavily. So I'd be worried about that for Rivian. Because I really do think car ownership will change. Like, less people will own cars in the self-driving era, and there's just not going to be enough reason to buy a car, that's not self-driving. Okay, this is one. Don't Sleep on Lemonade by Mark Patty, 2015. Insurance TAM is massive. AI is competing legacy pricing profitability models, and organization is built to scale globally with very little OpEx impact. With a $3 billion market cap, this company has tons of runway before becoming a mid-sized player, let alone a large insurer. So I actually think Lemonade is probably going to crush it. I've gotten so many notes on Lemonade, and it's really inspiring to see the shareholder community that's popped up around Lemonade. Very cool. Great company. I use them for renters insurance, but you got to stay in your lane and buy what you know. I just don't understand the insurance business, and I don't like the idea of insurance. Like this whole idea that we share the risk and something bad can happen and you're insured. Like, you're seeing what's happening in like Florida or California with fire insurance. It's like once enough bad stuff happens, they realize this insurance model is horrible and they shut it down. Then you have the self-driving car come out. So that whole car insurance vertical is going to absolutely get disrupted. Home insurance, you're in a way levered to potential financial or potential weather disasters. If a weather disaster happens, like that could screw over your insurance company. So I don't know. I'm a believer that there's potential for more volatile spikes in the climate with what humans are doing to the climate, and that could make it a lot more difficult for insurance companies to manage in the future with weird weather events. So I just something about the insurance business I don't like, and I'm probably going to miss out on an amazing company, and I have been missing out on Lemonade because it's been running up and crushing it. So shout out to everyone who's long, but something about the insurance business I don't understand. It doesn't excite me to research. And I think that's such an important thing when you're scheming on stocks in your portfolio. Like, if you're not excited about the product, you know, like I use Lemonade Renters Insurance. It was okay, but like, I'm not that into it. I just don't care about insurance. Like, and I feel like that will prohibit you from doing the work. If you kind of have a little bit of autism and you love learning about insurance and figuring out which rates and policies are better and how they're underwriting it and what their portfolio looks like and why that's smarter than other people's portfolios, and is their AI tool at insurance deciding who to insure and what rate really better than everyone else's AI tool, like I just don't know that and don't want to care about it enough. So that's why I'm staying away from Lemonade, which is kind of a lame answer, but I'm trying to keep it real with y'all because I feel like that's part of me is like, damn, this is going to be such a big company and has so much potential, because I love what you're saying about like tech forward company, limited OpEx, massive operating scale, tons of different verticals to disrupt. Very bullish on it, but I like to stay in my lane and buy what I know, which is, as I think about it, why I'm like, damn, I gotta sell my BitMiner. Like, I don't know what I'm doing with that. So if you have any ideas of what I should buy next or what I should do, let me know in the comments below. I've been looking and scheming a lot on Robinhood. I think they're an amazing company, but just haven't found the right entry point for them. I think the stock's a little overvalued, but I think they're doing really well. I mean, the companies that I think are doing top, I mean, Lemonade, Palantir, Robinhood, Coinbase, Airbnb, Tesla, owner, operator, founders, amazing companies. Those are the ones I'm following closely still. Also AMD, I mean, NVIDIA, of course, but if you know AMD, or anything about them and their move into inference, my homie Julian has been talking me up about that one. That's his new stock pick. I'm actually thinking about having him on the channel to pitch me on that because I think that one actually might have huge potential, especially with Tesla buying a ton of their chips. But so maybe AMD's my next pick, actually. I don't know. I feel like if you know anything about AMD, then leave that in the comments below. Anyway, this is HyperChange, G to a milli. I'll probably be back with an update soon on this whole BMNR Coinbase situation. What am I even doing? I don't know, but you know, it's important to understand when you're slipping from your rules and diverging from your what should be very rigid, disciplined sort of walls that your investing framework is in. Once you start dilly-dallying with other stuff and that's not serious, it really starts to mess you up. And trying to get rich quick and hop on something because of FOMO, and I feel like I did that a little. So I'm trying to recalibrate. But on the flip side, there's something there about the Genius Act and Ethereum taking over that is going to play out, that is a very big structural change, where if I'm right about how much of the financial system is going to get rebuilt on ETH, that is something worth thinking and getting exposure to, because it's going to be a very big deal. So I need your help. G to a milli people, help me. And anyway, this is HyperChange. Thank y'all for tuning in. Leave me a comment below with questions for the next G to a milli, and I'll see y'all next time.